10-year note yields finally broke out of the 2-week range, pushing up as high as 185. And recall, over the last several weeks, we've been stuck in a 170 to 180 range, seeing some chances of pushing through that 180 level, but inevitably backing off, getting back to the middle of the range, and then actually going back down towards the lows. It's been that kind of a trade in 10-year as buyers have come in, and I think volumes have been a little bit thin here and there. But ultimately, we were able to push through the old range, get above 180 as equities are making new all-time highs, as we're seeing the dollar bounce back slightly. Earnings are very positive, and yeah, the Fed has a meeting this week where they're going to be cutting rates, but it's what are they going to do after this meeting that the market is looking at. And from the tone, it seems that they're going to be a little less dovish, which would certainly add to some of the selling in treasuries. So at this point, that old 170 to 180 range seems to be out. Now I think you're looking at your next real support coming in around 190. I think 2% would be a pipe dream, at least before what we have this week with the Fed, with earnings, with jobs, and no longer Brexit. But I think at this point you need to have some kind of real big jobs number. You need to have earnings continue to be very strong, and a Fed that says we're done cutting and we're not cutting anymore, and be very clear about it. At this point, we don't have all that information, but we might on Friday. So at this point, we've broken out of the range. It's a big step. Sellers right now are winning the battle of tug of war, but for how long? And if you look at volatility did make a modest little uptick, which it should as we break out of the range. We sort of break away from expectations. Yes, we continued to trend higher if you look at a bigger chart, but ultimately I think as the market moves higher in yield, we will see volatility begin to go higher again. We're outside of the range, certainly with a lot of event risk still out there, despite the fact that expectations are pretty well established. Things don't always go as planned. So right now, volatility a little bit higher, certainly nothing to write home about, but obviously when we look at vols, they've been trending lower. When we stay inside of the range, breaking out of the range has bid them up. And lastly, what do we have this week? Well, we've got earnings and we've got the Fed, and we thought we'd have a Brexit announcement. Obviously, that's going to be delayed. And then we have the jobs report. So we still have a lot on the calendar. I think at this point, the market will be focusing very heavily on Wednesday's FOMC. After that, it becomes the jobs report number. Can the data support what the Fed decides at their FOMC? Because they're going to put a lot of onus here on the data, and this will be the very first look we get. So certainly will be a very interesting week up until Wednesday, and then becomes a new week as we head into the latter half, Thursday and Friday. So 10-year note yields right now pushing through making new highs from the 2-week range, but for how long, especially with all the data and news we have ahead.